Indian stock market faced the steepest fall ever recorded this year. The Sensex fell by 38% in less than 3 months. In this video, we will see how to recover your portfolio better and faster from this coronavirus stock market crash. Presented by Holistic Investment Planners. Let's get into the video. Coronavirus stock market crash. The Sensex crashed from almost 42,000 points to just 25,000 levels. It is the steepest fall ever recorded. The fall resulted in panic, negativity, and pessimism in the minds of investors. In turn, it caused fear and short term thinking. If you ask me, will we ever recover from this crash? I wouldn't be surprised. But the history says we will. The image you see on the screen shows the different crises we have went through in the past 40 years. We will recover from this coronavirus crash too. So how to make your portfolio recover better and faster? Faster recovery depends on what you own in your portfolio. Do you own any below average investments or above average investments? If you own any poor performing below average investments, your portfolio may not recover at all, or it may take longer time to recover than the stock market itself. So, what can we do? All you need is a powerful and proven strategy. What is that? It is portfolio optimization. Portfolio optimization. It is a strategy by which you can redeem your below average poor performing investments and channel those funds to a better and above average investments. But is it okay to redeem and reinvest now? Wouldn't it mean you're causing a permanent loss to your portfolio? Absolutely not. The strategy is not to come out of equity investments, but to come out of only the poor performing investments. If you are still sure about reinvesting your redeeming amount, you have nothing to worry about. This strategy will help you recover your portfolio better and faster than the stock market recovers than the expected time. So, the next question all of us have in mind is that, do I need to do this revamp now? Especially when the crisis is still going on, we are still uncertain when we will see the recovery. Is it a bad time to do this optimization, or is it the perfect time to do this portfolio optimization? Let's assume an investor with 3 equity investments and an 1 lakh investment in each of these schemes. Let's put him through 2 worst stock market crises in history. Let's see how he fared off with and without portfolio optimization, and let's check it out which is the right thing to do now. The first is dot-com crisis of 2000, in which the stock market crashed by 53%. So an investor's portfolio will look like this with 3 investment schemes. First is LIC large cap fund with 1 lakh investment, then Taurus Discovery Fund, which is a mid cap fund with 1 lakh investment, and ICICI Prudential multi cap fund with 1 lakh investment. The fall happened for more than 1 year. After the crash, his portfolio will have looked like the large cap fund crashed to 47,000, the Taurus Discovery Fund crashed to 53,000 from 1 lakh, and the ICC Prudential multi cap fund reduced to 56,000 from 1 lakh. In total, the 3 lakhs initial investment reduced to 1 lakh 57,000. So what will happen after the recovery with and without portfolio optimization? First, let's see without portfolio optimization. Without portfolio optimization, his portfolio would have looked like this. So we have after crash investments, after crash corpus in his portfolio is this, and after recovery the portfolio recovered to this, as you see in the image, which is the 47,000 recovered to 75,000, 53,000 in Taurus Discovery Fund recovered to 76,000, and the 56,000 in ICICI Prudential Multi-Cap Fund recovered to only 91,000. In total, the 3 lakhs initial investment after crash reduced to 1,57,000, and after recovery it is still 2,43,000. It is still almost 57,000 below 57,000 loss. We can take it as loss. So what do you think would have happened if the investor had optimized his portfolio? Let's see what will happen with portfolio optimization. This is what his portfolio would have looked like. The investor had gotten out of all the previous poor performing investments and replaced them with HDFC Top 100 for large cap, Franklin India Prima Fund for mid cap, and HDFC Equity Fund for multi cap. After the crash, this is the amount left in his portfolio: 47,000 in large cap, 53,000 in mid cap, 56,000 in multi cap. So the investor, after the crash, reinvested these in these selected better performing funds, and this reinvestment amount recovered to 82,000 in large cap, 53,000 of mid cap recovered to 1,14,000, and 56,000 of multi cap recovered to 98,000 after the complete recovery of stock market. In total, the 1,57,000 of reinvestment recovered to 2,95,000. If we see the initial 3 lakhs to this, it is just less than 5,000 to recover, or we can say loss for now, which will recover in the future. But compared to without portfolio optimization, it is a big recovery. In without portfolio optimization, the loss was about 57,000. Now it is less than 5,000. So what do you think? Is it better to do portfolio optimization now or after the recovery? So let's not come to conclusions. Let's see the other option also, which is the global financial crisis of 2008, in which the stock market crashed by 61%. So let's take the same examples. The investor has 3 investment schemes in large cap, multi cap, and small cap. In total, the 3 lakh fell to 1,29,000, which is a big crash. So for a moment, let's assume the investor did not work on his portfolio to come out of poor performing investments and invest in better performing investments. That is without portfolio optimization. This is what his portfolio would have looked like. We have the same in 3 investment schemes. After the crash, it fell to 1,29,000. The global financial crisis completely recovered on 4th of November 2010. After recovery, his initial 3 lakh investment recovered to only 2,28,000. It is almost more than 70,000 at loss. So for a moment, let's assume he chose to work on his investment schemes. He chose to come out of these investment schemes and invested in better performing funds. That is with portfolio optimization. This is what his portfolio would have looked like. We have 3 new better performing investment schemes, and reinvestment of 1,29,000 would have recovered to 2,81,000. What do you think? We had 70,000 loss without portfolio optimization. Now it is less than 19,000. It is very evident that portfolio optimization is the best way to recover your portfolio better and faster. But it does not stop here. There is also a benefit and bonus. If you do your portfolio optimization now, you will have very less tax liability. If you do your portfolio optimization now, your taxable capital gain will be very less. But if you wait for recovery, your taxable capital gain will be very high and it will take a hit on your profit. Follow these simple steps to recover your portfolio better and faster. First, identify your below average investments in your portfolio. Come out of those investments, be it mutual fund schemes or investment insurances like ULIPs. Reinvest those funds in a better above average investment schemes, preferably mutual funds. Continue to invest and watch your portfolio recover better and faster than the stock market itself. As an investor, you already know what to do now, but are you not sure where to start? Or do you feel like you're stuck in the middle? Do not delay your recovery at any cost. How do you feel about a free consultation with a certified investment advisor? We provide free 30-minute consultation. Register for yours now. Registration link is in description. Or you can visit holisticinvestment.in at any time you want for your free 30-minute consultation. If you like this video, like and share this video with your friends. Also, don't forget to subscribe to holisticinvestment.in.